All right, good morning, everyone. Thanks for joining us again today on Tuesday for this week's Market Talk. And my name is Ryan Huang. I'm the market strategist at IG. And later on, halfway through the Market Talk episode, we will be joined by my colleague Nabil Mata, Premium Client Manager. And just some, I guess, introduction to those who are joining us for the first time. This is where we give a macro outlook for the rest of the week. What are the key events to look out for? What are the trading ideas that you can keep an eye out for? And also, what are some of the key technical levels that you should be looking at for entries and exits? So I'll be doing the more fundamental part of the analysis, and my colleague Nabil will be joining us with a more in-depth look into the technicals. So at any point of time, you can just send us your questions through the chat room. If you don't like what we are focusing on or want to look at something else, just drop us a note. Or if you don't like the way I sound, just let me know. Or if there's anything we want to ask anytime during the session, you can just drop us a note, and we'll come to it once there's a chance to do so. So before we start things off proper, we'll just go through the formalities of the disclaimer. So just want to make sure as well at this time that everyone can hear me clearly. I'm not too loud. If it's okay, just drop me a note to say that you can hear me clearly. There's no lagging or any sound quality problems while you read the disclaimer. These are all educational ideas for informational purposes. These are not specific advice or trading recommendations, because these are not tailored for your financial background. So IG takes no responsibility for any of this information for that you're going to hear later on. All right, thanks, Lenny and Mr. Tiam. Seems like we're all clear to go. All right, so I'll just recap what we've been seeing over the past week. All right, some of you might recognize this. Anyone knows what this is? Can just drop me a note. It's been making the headlines. This is actually a toy that's been sold out in the US. It's $9.95 for the small version and $20 for the big one. This is the Ebola virus toy. It's actually getting sold out in the US. So this has been causing some market jitters over the past week with all the, I guess, possible spread through more countries. But I think it's starting to drop out of the headlines. And this week, these are the people making the headlines. You've got on the top left, Jokowi. He got sworn in as Indonesia's president yesterday. And over the weekend, we had the India Prime Minister Modi. So over the weekend, he cut fuel subsidies, which was a very positive move for the economy, because that takes off the strain from the budget. The fuel subsidies have make up about 20% of India's budget, so that's a really big lift, and also a good momentum for reforms. So that's been giving a lot of, I guess, optimism for investors on the India rupee and the Nifty. So Jokowi is going through a similar sort of situation as well. Indonesia subsidizes a lot on fuel. So he's going to be going through the same reform policies, and if manages to push it through, that will be positive for the Indonesian rupiah, as well as the stock market sentiment. And of course, today, the big news in Hong Kong, bottom left, you got CY Leong. The Hong Kong government's going to be meeting with the pro-democracy protesters for talks to see if they can, I guess, reach some form of agreement. There's probably not a lot that's going to happen out of these talks, but it's going to be something to watch out for to see if there's any tensions or possible rise in tensions that could affect the Hang Seng. So I think until we get this out of the way, it's going to be probably a bit choppy on Hong Kong stocks. And yesterday we had some Japanese news. Two female ministers quit Shinzo Abe's cabinet. So that was quite a big blow for his popularity mandate. He's been pushing for women in the workforce in his cabinet. So this puts a dent in his reforms momentum. He's been trying to push through the GST measures. So that's a bit of a dampener. But today he's managed to appoint some new roles into this. So just a quick glance. I'll go into the details, specific days later in the next few slides. But I can tell today's story is China, or this week's story is China. We have a lot of Chinese data, retail sales, industrial production numbers, GDP. Later in the week, we also have some Chinese data. Okay, so what we have today, RBA minutes right in the morning. They came in a bit dovish. RBA said, as usual, Australian dollar has been a bit overpriced. It's a bit too strong for the economy to handle. So we're probably going to be expecting a bit of pressure on the Aussie dollar over the next few days. And then just a few minutes ago, we had the Chinese data coming through. It came in was actually a bit better than expected. 7.2% was the forecast for Q3 GDP. The reading was 7.3, so slightly above expectations. Also good data for industrial production numbers, 8% instead of the forecast of 7.5%. So we needed something around this 8% region for the GDP numbers to be on track by the end of the year for 7.5%. So all these are all putting, I guess, allaying the worries that Chinese economy is slowing down. These give some form of confidence that things are actually doing not so bad for China. Of course, Hong Kong talks later on. We'll keep an eye out for it. Another thing to watch out for tomorrow is the Bank of England minutes. Not a lot of focus on it. The focus will be more on the PMI numbers that I'll be going into in Germany later. Later in the tomorrow night, we'll get the US CPI. It's very hard to give a good direction on the US dollar this week. There's a lot of factors driving it, from the Aussie dollar and the various currencies all moving in a few directions. So this week's US dollar reading is quite difficult to give a good, solid direction. And on Thursday is quite a heavy day. We've got China's HSBC manufacturing PMI. That'll give another indication of where the economy is headed. And then Germany is the one to watch. We've been watching a lot of bearish data out of Germany, and this is usually an indicator of where the rest of Europe is heading. And if we get another set of bearish data from the PMI, we could see more downside pressure on the DAX, on the euro dollar, on the euro pound, and other European indices. So later, half an hour after the Germany PMI comes out, we get Eurozone PMI. So a lot of possible movement ahead of these two data sets. And then later at night, we have come European sentiment again, consumer conference board numbers. They give another indication of how consumers are concerned over spending. So the reading is for things to actually worsen to minus 12.11 from a reading of minus 11.4. So expectations are for things to get worse. So hopefully things improve and we see a bounce back in the Eurozone, but I don't think we're going to be seeing that anytime soon. And finally on Friday, this is actually something that I'm watching very closely, the China property prices at 9:30 a.m. on Friday. Over the past year, since I guess late last year, we've been seeing the index at 9.9+%. And over the past few months, it's slowly dropped to 0.5%. So this is going to be a very interesting reading because we might get the first negative reading in a long time. And I'm sure you've been hearing about how there might be a possible property slump in China. This will be uh, quite a shift in sentiment to see a negative reading. So we've got one long week of positive data. So if we get a negative reading, we could see some profit taking at the end of the week. And the other one to watch out for is the UK GDP numbers later in the afternoon at 4:30. We're expecting things to slow down to 0.83% from 0.9% in Q2. All right, what are the possible trade opportunities coming up this week? What I'm watching out for will be the industrial metal prices. Over the weekend, we had the Chinese Central Bank. There's been reports that it's injecting money into the regional and national lenders to boost liquidity and help lending. That actually saw especially aluminum prices bouncing. And other things that could get supported with good Chinese data will be copper prices, the Aussie dollar, mining stocks like Fortescue and Santos, and possibly also oil prices. Another thing, I guess, trading opportunity that I'm actually quite interested to look at is the Volatility Index. You've seen a lot of the headlines, I guess, not so many worries now. Not so many worries now in the headlines. So you've seen the Volatility Index kind of pull back from last week's high when we had all the European slowdown concerns, the concerns on the Ebola, and uncertainty over what the Fed is doing. But as you imagine, there's still a lot of unresolved issues out there. The pro-democracy protests are still ongoing. The Ebola virus situation might spur back again, and you still have the Germany data coming through later in the week. So still many factors that could push uncertainty this atmosphere, and see the VIX repeat its 20% jump from last week. So right now the pullback is giving some very interesting windows to get in. And in terms of earnings this week, in the Singapore Exchange, you have Keppel, Singapore Exchange itself. Tomorrow you have Sheng Siong, Aztec Group, A-REIT, and Friday Capital Commercial Trust and Maple Tree Commercial Trust. And there's one interesting one to look at today actually, Aztec Group. You might be familiar with this restaurant called Kaylee. They bought the Kaylee restaurant, this roast meat business at Paya Lebar, for $4 million. So Aztec makes all these electronic routers and modems and LED lighting. So this is a big step for it to diversify into the restaurant business. So it's a very interesting move for them. So it's going to take probably a long time for this restaurant business to pay back. So if you've been watching the Aztec Group share price, it's been consolidating for a while, and with results coming in on Thursday, it'd be quite interesting to see if it can, it's where the breakout is going to be. And finally, oil prices, we've seen it drifting lower over the past few weeks. It started to get some support around this level. So a lot will ride on the Chinese data this week, what we're going to get in terms of momentum. So if we get some upside on Chinese data, we could see oil prices start to pick up again. And so far, is there any questions before I hand over to Nabil?